Well, holy smokes, everyone. The Federal Reserve and the banks have just crashed all markets. The stock market crashed today. We saw cryptocurrency crash. We saw gold, silver down. Everything is down. So why exactly is that happening? Well, that's exactly what I'm going to cover in today's video, because what we got today was we got the Federal Reserve Chairman, Jerome Powell. He testified in front of Congress, and he gave us some huge warnings. What's going to be coming ahead with interest rates, what's going to be coming ahead for the economy, and ultimately what that will lead to in the markets. So I'm going to break down exactly why all markets tanked today and why this could only be the beginning. And like I've been warning about, we're going to be facing another huge stock cryptocurrency market crash coming very soon, or we are in the process of one right now. And even though the economy's been holding up better than expected, while Jerome Powell said they're going to have to inflict even more pain to cool this inflation fire. So everyone, let's not waste any time. Let's get straight into the news, the facts, and the data. Well, everyone, look at this. Dow closes nearly 600 points lower and turns negative for 2023 as Powell ignites higher rate fears. So that's exactly right, everyone. Listen to this. Fed Chair Powell says interest rates are likely to be higher than previously anticipated. While previously anticipated for all these market analysts and also for the Reserve Chairman and the Federal Reserve chairs, but I know, and all of you guys knew, that inflation was going to get worse, it was going to stay high for longer, and we are going to go to much higher interest rates than many people in the markets believe. Now, before we get into Jerome Powell's comments, let's go have a look to see exactly what happened in the markets today. So look at this. For all my gold and silver investors, gold was hit hard because the dollar rallied. Whenever the DXY rallies, that's bad for commodities. So gold was down nearly 2% to $1,818 an ounce. Silver was hit massively. Silver down nearly 5% today, down to $20.15 per ounce. We can see right now, I'm looking at the chart live, Bitcoin is struggling to hold the critical 22,000 level and has dipped below that. And let's see if it can go any lower and retest some of the levels we saw here early in the month in early February. Now, a huge reason why the markets are tanking right now, because look at this. The yields on the short-term treasuries are absolutely skyrocketing. You can now get 5.2% on a 12-month treasury, and the 2-year has gone to over 5% for the first time since 2007. And what happened after 2007? That's right, the global financial crisis. And what I think is going to happen is you're going to see a flood of investors sell their stocks and go into bonds to wait out the volatility, or they could sell their cryptocurrencies, go into bonds. Now, you may think, well, if inflation's 6-7%, why, if should we say the CPI is 6 or 7%, why would you own bonds if you're only getting 5%? Well, the thing is, it's better to get something than nothing, because you may say, okay, well, look, inflation's too high, so we're going to have to go into risky assets like Bitcoin and stocks. But what's happened with Bitcoin and stocks is they've crashed. So not only has people lost their 6 to 7% of their purchasing power, also they've lost 10 to 15% in stocks, and even greater in Bitcoin, up to 50% if they brought it the highs. And if yields hit 6%, which nobody thinks could happen, I think it definitely could happen late this year, while the risk to reward ratio for owning stocks just won't make sense. Also, for real estate, if you can get 6% yield doing nothing in a short-term treasury, why would you go through the hassle of being a landlord, dealing with maintenance, dealing with the risk of a highly inflated housing market right now, when you can just put your cash in treasuries and get a better yield than real estate? He said if the totality of the data were to indicate that faster tightening is warranted, we will be prepared to increase the pace of rate hikes. Now, this is what spooked the markets. I think we're all going to see a 50 BP hike this month, everyone. The central bank leader said in prepared remarks for appearances this week on Capitol Hill. Powell said the current trend shows that the Fed's inflation fighting job is not over. Well, that's exactly what I've been trying to warn people about, just going off the facts and the data. But a lot of people are saying, oh, Michael, you just doom and gloom. Nothing's going to happen. You know, they're going to drop interest rates to zero, and then it'll be all sunshine and rainbows again with your stock portfolio and your crypto portfolio pumping back up. So this is some key remarks that I've highlighted that are very important, everyone. In their December estimates, officials pegged that the terminal rate would hit, so this is their federal funds rate, 5.1%, but current market pricing moved higher following Fed remarks look and listen to this, everyone. It's moved to a range of 5.5 to 5.75%. So we're getting very, very close to 2%. And what's been the trend, everyone? They've been saying, okay, 5.2%, 5.5%, 5.75%. People, I think they're now going to have to go to minimum 6% to bring inflation down. And really what they have to do, like what's happened throughout history, this time is not different, everyone. Even though they try to say those very, very dangerous words, this time is different. They're going to have to lift the federal funds rate above inflation. And listen to this. He also noted there's little sign of disinflation. Wait a minute. I thought he just said last month that we're now in a process of disinflation, that the disinflation process has begun. But now, literally the next month, he's saying there's actually no sign that there's disinflation. This is why the Federal Reserve has absolutely no credibility whatsoever. When it comes to the important category of services spending, excluding housing, food, and energy, that is an important qualifier considering that the chairman at his post-meeting news conference in early February said that, like I said, the disinflationary process had begun in the economy, remarks that helped send stocks higher. Now that's very, very silly what he did because he undone a lot of good work the Federal Reserve has done. They tried to tighten financial conditions. They tried to tell people, look, don't speculate right now. The markets aren't going to do good for the rest of the year. But what he did by saying the disinflationary process has begun is he created huge speculation. People flooded back into stocks. People went in there and spent like crazy, hoping interest rates will come down. People may have bought real estate hoping the interest rates will come down. And what that means is we're going to see a second round of inflation, or we would have seen even higher inflation if he would have kept that up. However, as Powell spoke, markets priced in, listen to this, a 69% probability of a higher 50 basis point hike increase at March meeting, according to CME Group data. So I just want to reiterate, everyone, we are at a huge critical point in time. At the start of 2022, I was trying to warn everyone we're going to 5% interest rates. Everybody thought I was crazy. Well, we're now pretty much at 5%. Now, I think what's going to happen is the Federal Reserve is going to have to go to 6.5%. Either the CPI inflation rate is going to have to fall to the federal funds level, or they're going to have to lift the federal funds rate above inflation like they have throughout history. What that's going to lead to is yields continue to skyrocket on the short-term treasuries. People are going to sell their stocks, go into bonds. That's actually what I'm doing, not financial advice, but I've never bought treasuries or bonds before because it never made sense. But with these yields, I can actually get some yield on my money while I wait for stocks to fall back to fair value levels. Also wait for cryptocurrency to fall. I'm really only going to speculate into Bitcoin. I'm not going to speculate into any of the altcoins. Those are just completely too risky for me. There's only a very small portion of my portfolio that will go into Bitcoin. But I'm only going to do that once Bitcoin falls back down to around the 17,000 level, and also once stocks price to earnings ratio go back down to fair value of around a price to earnings ratio for the S&P of about 15 to 16. Also, for all my gold and silver investors, if the dollar keeps on rallying, this will be bearish in the short term for gold and silver. I've already got my gold and silver position. No need for me to add to it. I've already got a good position there. So I'm just going to leave it, hold it. I'm not selling. I'm not panicking at all. Now, what this will ultimately lead to in the economy is a lot of these businesses that thought they could hold on to their staff, that thought, okay, maybe we're at peak interest rates now. Maybe we can get through this. Well, we're going to have to go to interest rates much higher than these business owners thought. We're going to see more layoffs. And now, because the Federal Reserve didn't do their job early on, we're going to have a much more painful recession than if they got on top of inflation. If they didn't stop the pace of their rate hikes or slow the pace of their rate hikes, maybe we could have got out of this with somewhat of a softish landing. But now we're going to have to go to such high interest rates, something in the financial system is going to break, like what we're seeing now with commercial real estate sector and also with the banking sector. So everyone, you're definitely going to want to prepare right now. Do whatever you can to increase your income, pay off debt, because debt is going to get much, much more expensive with higher interest rates. Get an emergency fund, start a side hustle, get a second job, whatever you can to prepare for the recession to be coming, and ultimately the huge discounts you're going to get in stocks, cryptocurrencies, also real estate, cars, etc., because everything is going to be sold for pennies on the dollar when there's blood in the streets. But everyone, what do you think about all of this? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.